Welcome to the Pump and Dump channel for another video. This time I decided to make a video quickly talking about this idea I have for an options trade for myself. And with that said, of course, this is not investment advice or recommendations for you to do the same, but this is what I have done the last 2 days. So I've talked about Diamondback, how I believe that going into the annual reports being released probably in February or March, I believe that there will be a write down of reserves, and as a consequence, the the asset value will drop. And with that, happening, that should lead to the stock price going down. Now, also at current, I am of the persuasion that the stock is overvalued based upon the known reserves that were reported last year at I think it was a $51 oil price, and at current we're at about 52. And with a 52, 51ish kind of oil price, I think the stock should be around 55 at most. But it's it's gone up to 64. It got up to, I think, 64, almost 64. Yeah, it did exceed 64 here. And I bought a put. I bought one on the open, near the open here for the 12th of January. I bought one. I bought another one on the 13th of January, about when the stock was at about 60, 61.80ish or so, and then I bought another one yesterday when it was at 63. So the options I bought have different strike prices and durations. Two of them are at 55 and one is at $50 strike price, and the duration is for May and June. So I have some time on these for this to happen. Going into the annual report, I think at latest it would be out in April. If there was any delay for whatever reason, it would come out in April, and then I would see that revaluation, write down of reserves, and hopefully that works out the way I planned it. But yeah, these three options are not the only ones I bought. I also bought one option, a put option, a $40 put option, when it was at 43 here in November 23rd. I was convinced it would go down to 30, and you can see, of course, the stock price has been rising. I think here the issue was that I was just in way too early. I was thinking far too far ahead. I was not respecting the time that we need to get to where I was thinking we're going. So I made a mistake there, obviously, in terms of timing, not considering the time impact. But I was sure at that point that it would drop to at least 46 when there's a write down of reserves. Even on the $50 or $55 oil price, I was convinced it would be it'd be 46 at most, and possibly 40 or even 30. If the oil price was $40, I would think it'd be at 30. So that's why I took the position here. Of course, that's gone into the toilet. That put option is down by 95% or so, but I have until May with this one too. So I think I'll get some of that back. Not all of it probably, but I think also with the three puts I've added the last few days, it should, in theory, it should, if the price does fall off the stock, it should fall down here to 40, 47 at least. I'll make up the difference of what's lost here with that. So that's kind of the idea here. Now, in the theoretical model portfolio, I was I sold Diamondback because I was thinking too far ahead and went into refining stock, and I did mention at the time that I thought that the refining stock would double before Diamondback would double, and PBF Energy, they only went up 50% so far, I think, or 60%, and Diamondback has gone over 100%. So I was wrong on that, that assumption, and that was obviously, one thing was wrong in my thinking, and then it led to the outcome being completely different than anticipated. So anyway, it is what it is. I got to live with it. I didn't get crushed completely. It's not like I bought something that just kept falling. I mean, that's something that comes with time and doing proper analysis and knowing what you buy, not buying trash. And yeah, that's how it went. So this is my thinking. I think here we have this technical level here, and one here, and also one here, and then at 72 here. This is also one that I thought, it's potentially possible, but I already have like 4 put options out, and I've put like 1,000, maybe 1,500 into them in total. And if it does go to 72, this is kind of where I'm planning to buy more put options on the stock, unless something dramatic happens that I just didn't see coming in the annual report. Then I would reconsider. But this is the plan for me. I believe that we'll have this pullback. There's not long until February, March. We could sell down slowly into it. We could have another pop and then a steep drop. If there is a pop, as mentioned, I would buy some more put options up here with $60 strike price or something like that, and then it would be a challenge here to get this money back plus this money back. But if I buy put option up here and it does fall to 46 or below, like I think it's possible, then all that especially this one will not matter, and I would get my money back, is kind of what I'm thinking here. So that's kind of for Diamondback the way I see it. I've talked a lot about it in the last year, and it is where it is. I was wrong to sell it here, but I thought my thinking was rational and made sense to me, so I went with it, and I was wrong on it going. It went up more than I thought, and it's just the way it is. So looking here at oil price, it's not just the fundamentals here that I'm looking at to determine here, but it's also looking at the oil price, the technicals on oil price. I drew out this triangle here probably around here somewhere last 2019, so it's a year and a bit ago. And I at that time I mentioned it would either go up or down, because it's coming to a head here. It can't just end here, and it went down, and that's just the way it went. It went down, and that's rebounded, and it's come back towards this technical line here. And the narrative, of course, now is that all these countries are going back into lockdown, and Italy is talking about staying in lockdown until April, and other places were talking about doing it until January, and then extended it to February. And there's all this talk about this and about that, and nobody really knows what these governments are planning. It's completely unknown what their real intentions and their plans are. So the narrative is there for why it would pull back. Also on the technicals, it looks to me like it could pull back on the fundamentals. The fundamentals are, if we get to $50 oil price where we are right now, there's not much room to the upside, because at this price many companies can make money, not necessarily make back the losses for their shareholders, but they can make money going forward. So they'll start increasing production, and then you would see the production being met, the demand being met with production. And also there's this news about Saudi Arabia cutting some production, and usually the way people think is, if they cut production, the price will go up, and it has gone up. But if they're cutting production, it kind of means the demand is weak, or they anticipate the demand is weak. So if the demand is weak, then what is the bull case for the price to go higher and then keep on going higher? Because if there's no demand there, or the demand is less than the supply, eventually there should be an oversupply situation, and then the price should pull back, because nobody's going to buy oil now to hold until 2028. So that's where it's at. On the chart, I think we can get to this technical level here, this trend line, and then just bounce off and fall back to 42. Maybe we just fall to 48, or we fall to who knows where. But that's kind of what I'm thinking. So I see in the oil price and in the stock fundamentals, I see some weakness here that can drive it down, and that's kind of why I've taken on these positions. So I'm just summing that up again. So it's as mentioned, not a recommendation for you to do the same. It's very likely it could jump up to 72 on some technical exuberance. I remember Cabot Oil and Gas, I had a valuation of 16, and it ran to 24, because it's like one of the best producers of natural gas, the best acreage, the lowest cost, and Diamondback is also a very good company in terms of oil production, so they could get a premium above this 50, 55 where I think it should be at this point in time. It could go to 75, so need to keep that in mind, that that's possible, and that's kind of what we are hoping for if we want to bet against it. And if it does go here, then it's a clear short or buying put options, which is my preferred choice, because it costs less to buy put option than to to borrow. You have to put more money to borrow the stock. It's just the way I see it. And if I'm wrong, of course I lose all my money. With a short position, I can always get out and not lose as much as I would do with a put option in terms of percentages. But I just I feel like it doesn't really make any difference if the investment thesis is right and the math is right and everything suggests that you should be paid off. Why would you not take the easier option with the greater upside? Next, I wanted to talk about Range Resources, because I remember, I don't know if I mentioned it in one of my videos, but I did buy a call option here when it was at about 8 before the earnings. I think it was before the earnings in Q3, and they were not good, and I was looking at the valuation. I was not thinking about the impact, and there was enough evidence in like the presentations reports from other companies like CNX and Cabot and others. They were all talking about deferring production to Q4, and Range Resources, I don't know if they put out some information about that. I can't remember that anymore, but they did the same. So their quarter was bad, and I bought 4 call options here. I thought it was going to jump to 9 on the earnings report, and I bought 4 call options for I think November 6 or so expiry date, and as you can see, it went absolutely against me. So I lost 400 euros on that, and that was obviously not cool. But I reflected. I said to myself, the technicals, it's at this $6 level. I still think it should be 9. So I bought 12 call options down here, and when it ran up to here, I sold 2 at, I think it was at 780. It probably was when it was at 780 I sold my call options, because I was, I can't remember what the price was on them, because it's always like 0.78 or it's 2.93 on the call option. I don't keep that in mind. I just look at where the start price is, and that gives me an indication of what to do. And I sold 2 here. I wanted to sell half of the 10, but I bought it in 2 blocks, and I couldn't not do a partial sell. I had to either sell all. I had to create a new order, and I just decided, okay, I'll sell the 2, and then we'll see if it gets to 9. I'll sell the rest. And as you can see, it retraced back here to 620. So then I was kind of flat down, maybe a little bit because of the time decay, and then I decided I was not going to sell them until we're at least at 850, and then we have this rebound here. And when we got to, I think it was here on the 11th, was it the 11th or the 12th? I think it was the 12th. Yeah, on the 12th we had this big move up on the open, and I sold when the start price was at about 880. I sold my call options, made about 1200, 1300 euros on those 10, and the other 2 I can't remember. I made some money on those as well, and overall I kind of made up for the loss, because the thesis was right, the timing was wrong, and the math was, everything was right. And as you can see here, it's shooting up, and I sold the call options here because I had until January the 15th, and I didn't know if there was going to be one more pullback, that might have gone until the 20th or whatever, and then we would break through this resistance. But when I bought them, my valuation for Range Resources was about 9, and it didn't get to 9, so I held on to them. And around here, I checked again. I did I just did the numbers, and I came out with 12 because the oil price had increased, and and this is using the model I've talked about, the using the oil price for the natural gas liquid side. It should be at least 12, and this is kind of what the market has been using for the last year or two that I've been following this company, and my intrinsic value is still 16 plus, and 16 plus I think is going to come sometime after the annual report comes out. But I did see, that it was possible to go to 12 when it was down here, and that's also why at the year end, when I looked through the portfolio, I couldn't sell Range Resources. It was not possible to sell it. It would have been a huge mistake. And it's shooting up. I think it will get up to this 12 level, because you can see here there's a technical, level here, some line, and that kind of coincides with the valuation. And we're heading into the inauguration of Biden, which is of course a surprise given all the evidence that was presented of all the fraud that was committed and everything, and nothing came of that, and Biden's going to be inaugurated is kind of what we are at now. So going into that point, I think we can have a pop when that finally happens, because there's lots of people around the world who have this how should I call it, this delusion that Trump is evil, and as soon as Trump is gone, then everything's going to be great again. So when Biden's inaugurated, you can see from the sentiment perspective that would be a sell the euphoria type of moment, and also from a technical and a fundamental perspective, if Range Resources is at 12 on January the 20th, it's definitely a point to lighten up, and that's kind of what I think I will do when we get to that point. So I'm just kind of pre-announcing that if that happens, that's kind of where I would be selling half of the Range Resources position. And yeah, so this is kind of where it's at. Then also on the 21st, it'll be interesting to see, because this congresswoman, she said she's going to move forward to impeach Biden, because he's also corrupt as most of the politicians, and has sold out to Chinese and other companies to get his son into all these favorable deals and all this nonsense, is what she's saying. So yeah, he's going to likely be impeached or whatever, just like they're trying to do with Trump now. And it's going to be really, really funny to watch. But in terms of sentiment, that would of course be a negative, and I could see then a pullback, and we'll see of course how that unfolds. But I do believe that eventually Range Resources is going to hit this 1150 to 12, let's say. I mean, for me it's 12, but it could be at 1150 we stop. I think it's going to hit that, going to retrace. Maybe it's going to come back down to 950, and then it will shoot higher. That's kind of how I'm seeing it. That's what I'm thinking. So yeah, that's kind of where it's at for now. Just wanted to upload this video, mainly focusing on how oil seems to be getting to a technical point of topping out. Also the RSI here is kind of overdone to the upside. Yeah, eventually the RSI will come down, and it's likely that the price will have to come down to get the RSI down. So that's where it's at. We will see of course what happens here with these Diamondback put options of mine. I'll maybe post a video when I sell them, just to get some info out on how it went, I guess, because what's the point of saying I'm doing this if I don't follow up and say if I got creamed, or if I made out like a bandit. So we will see. I'm going to end this video, and I'll repeat again, it's not investment advice or recommendation for you to do what I'm doing. If you like of course the video, you can leave a comment, or you can even put a like on the video, I don't know, and you can of course leave questions, comments, opinions in the comment section. Subscribe if you like the content, and yeah, have a good day.